You have a chance now to talk with Elizabeth Warren, who is chair of the Congressional TARP Oversight Panel. Your operation has a new report coming out. What did you look at? What does the report say?
Well, this is actually our third report on mortgage foreclosures. You may remember that when Congress passed the original $700 billion bailout, they didn't say, here's $700 billion, go bail out Wall Street banks. They said, here's $700 billion to deal with troubled assets, meaning mortgages that were in trouble. We managed to get the banks back in the black, as we know. They're posting good numbers. But mortgage foreclosures continue to be a very serious problem. So what this report is about is evaluating what Treasury's done and really trying to make sure that the attention stays on that important metric. Congress said, we will measure the success of TARP by its effect on unemployment, its effect on people's savings, and its effect on mortgage foreclosures.
Remind us of what TARP is, when and why was it put together, and then tell us how you think it's performing.
Right. You remember the crisis in September and October of 2008. The stock market is dropping. Credit markets are freezing up. There's a real question about the solvency of our largest financial institutions. And then Secretary of the Treasury Henry Paulson turned to Congress and said, I need $700 billion to be able to deal, as he described it then, with these subprime mortgages and other troubled assets that the banks are holding so that we can get credit flowing again, we can stabilize the banks a little bit, and we can stabilize this growing foreclosure crisis in the country. Now, that was the announcement. Congress passed it, and as part of passing it, put an oversight panel in place, that's us, and told us we have to write reports every single month, and that's what we do. Secretary Paulson then quickly pivoted and said, wait, that's not going to work. So what we're going to do instead is put money directly into the large financial institutions. We did that. They're now making money big time, paying out those big bonuses. But the rest of the economy is still struggling, and foreclosures continue to climb.
So what's next with TARP? We hear about how much money this is going to cost, or maybe not cost at this point. Where are we right now, and where is it headed?
So for the bank bailout part, we're getting a lot of that money back. We have a very large proportion of those dollars back, and we seem to be doing pretty well. There are going to be some that are probably not going to pay. Whether or not the auto companies will be able to pay depends in part on how many people get out there and buy those cars. Do they really have a good product and a good business model? Obviously, we've still got trouble out there with AIG, whether or not we're going to recover all of our money there. There are a few banks that are still in trouble. Most of the big ones are coming back. So that part of the program has pretty much gelled. We see how it works. There are other pieces to the program dealing with small business lending, and in particular with mortgage foreclosures. That part of the program has been much slower to get started, and a problem that still seems to be unfolding. And the reason this is important, it's not that the Congressional Oversight Panel is saying, hey, look, we need to save every homeowner, we need to bail everyone out, everybody who ever bought a home needs to stay in that home. Hey, look, that's not the case. Some number of people need to be moved out of those homes. They can't afford them, never will. But for those who could come to the table and make a deal with their lenders, those deals need to get made, and we need to stabilize this market, because until we do, we're going to continue to have trouble in the economy overall. Construction industry is a big part of our economy, and when the housing market is still going down, there's no new construction. Same thing with furniture and home centers. Lots of employment is related to this. And ultimately, no economy recovers when everyone's looking out saying another million foreclosures this year, another million the year after that, approaching a million the year after that. This is a problem we need to get ahead of, we need to get it resolved, and rebuild our economy on strong footing.
Let's get right to our calls. Arlington, Virginia. Patrick, Republican for Elizabeth Warren. Hi there.
Hi, C-SPAN, how are you?
Fine.
Elizabeth, how are you today?
Good.
It's good to hear. I just wanted to make a couple comments and then ask a question here. Relative to TARP, my research has shown that Bank of America, Citi, and all the auto companies have got less money than Fannie and Freddie, Fannie Mae and Freddie Mac. seems that some people in this country are under the impression that housing is a right, and it's not a right. It's a pursuit of happiness. The subprime issue has not been addressed yet by this Congress, and everyone knows it's what caused the collapse.
Elizabeth Warren.
So I think you make some very important points here, and the first one is, we have a congressional oversight panel for TARP. That's $700 billion. But you're exactly right about this, Patrick. That's not the only program out there. The money's being pumped into Fannie and Freddie, and I should add to that, remember that the Fed is putting a lot of guarantees back into this economy, has opened up the window, is basically lending for free to these very large financial institutions, and they can then turn around, and if they want to make even small investments, it's a license to print money. I mean, this really works. So TARP is only a subset. I want to grant that point. TARP is the part that's in my portfolio, and so that's why I come here to talk about it. But Patrick, your other point is really the key one, I think, and that is, we were in a crisis. TARP and these other programs were about let's patch through. We don't want to fall over the cliff here, but we gotta solve these problems overall. Congress is out there a year and a half after the crisis, still arguing about regulatory reform. Those are basically the rules of the road going forward. Until we get those rules in place, our lenders are still going to be doing, and they are, the same old things that got us into trouble to begin with. So, in my view, the number one issue we should all be focused on is what are going to be the rules that come out of Congress for the large banks, for consumers, for derivative shadow markets. This really tells us who we are and what we're going to be for the next generation.
And as we know, the House has a bill, the Senate waiting for floor action on its bill. You can watch it all here on the C-SPAN networks. And San Antonio is on the line now. Kenny, Democrat for Elizabeth Warren. Hi there.
Yeah, so my question was on the Help for Homeowners program, because they were trying to help folks write down their mortgage because people lost a lot of money on their homes. But, at the time when I was looking it up, it was saying you had to be behind in your payment like 3 months. But we haven't missed, me and my wife, we haven't missed a payment, but she got cut back on her hours at work. And so, we're trying to keep our credit good. We don't want to, go into a foreclosure, nothing like that, but it's really hurting us. So are you guys going to, revamp the program and look at that now to, people that, that they're losing work hours and it's hard for them to make their payment? So you guys going to look at that?
Well, remember, what we do is we look at Treasury and look at the programs that Treasury's putting in place. And one of the criticisms, quite frankly, that we've made of Treasury is that they have come out with a program that is too small, that's hard to scale up, and that may not be providing sustainable modified mortgages over time. Now, I want to give Treasury some props here. Treasury has tried some new programs. They're bringing some more programs online. But this is the part of the problem that you're facing. It's confusing when you keep changing these programs. They're doing what are called incentive-based programs, which means they're offering money to the lenders to try to get them to the table. Some of these programs won't be fully ramped up for another year, which really brings us to 4 years into the mortgage crisis, 2 years into the stewardship under this Treasury. So what I can say is we're sure trying to push them in that direction, but that's our tool, is only to push.
And Scott, independent caller from Valdosta, Georgia. You're on the air. Hello, Scott.
For taking my call.
Yes, sir.
I just heard there on the break before the guest came on that J.P. Morgan Chase, I think, had 50% increase in profits in the first quarter. Kind of bothers me. That's my mortgage company. He will not deal with me at all in trying to get any kind of modification going. My point is, to your guest, is what others have made, is that, these banks from the get-go, once we gave them $1 trillion, their plan was just to sit on it until things got really bad, and then they'll hand that money out to their friends and family. They're going to buy up everybody's property for 30 and 40 cents on the dollar, and that's what they're doing right now.
Let's hear from our guest.
So I'll tell you, Scott, I'm really bothered about this. A year and a half ago, basically, the Secretary of the Treasury then, Henry Paulson, came to us and said, look, I know nobody likes it, but we're going to have to bail out these big Wall Street banks, because if they go down, we all go down. He was making the argument, like it or not, we're all in the same economic boat. And I don't know about you, I didn't like it. I think there are a lot of other people who didn't like it, but we swallowed and said, okay, if that's what it takes to save the economy, let's make this happen. Here we are a year and a half later, and JP Morgan Chase, man, they're rolling in the money. They're making big money, and they're able to pay it out to their executives. And yet they went in front of Congress yesterday and said about Treasury's plans, the plans that I was just talking about with Kenny, that are modest, Treasury's just trying to get them out there. They said, in effect, you know, we actually don't think so. We don't want to go along with what you're proposing here. Remember that thing about the boat? That's for the rest of you. We're going to go our own way and make our own money. I just find this stunning, quite frankly. I don't get how they can do this. These are financial institutions that would not exist if it had not been for the American taxpayer.
Message via Twitter for you. Why wasn't the bailout used as leverage to require banks to extend credit and to remodify mortgages?
You would have to take that up with Secretary Paulson. Quite frankly, it is a question we started asking over a year ago as part of the oversight panel, and it is simply not the direction, not what was asked of.
What's the size of your office?
We have a staff of about 30.
Budget?
I think we've spent about $3 million from the beginning. I think that's right.
Do you have a specific term as chair of the office?
I'm chair as long as the Congressional Oversight Panel exists. We will exist until 6 months after TARP expires, which means right now TARP must expire this October. Expire meaning they can't do any new programs. It doesn't mean they get all the money back, but they can't start any new programs. We will therefore end a year from this month.
Let's hear from Cleveland. Madeline on the Republican line for Elizabeth Warren. Good morning.
Hi, thank you for my call, and I find everything that you're saying so informative, and I know we've heard some of this before, but it's good to continue hearing your message and all that you're telling us. I am listening to other callers. I guess one little thing that's brought to mind for me regarding the housing issue, I mean, I grew up, I was born in 1950. My dad, PhD in chemistry, went to, GI Bill. My mom, a stay-at-home mom. We lived in apartments until I was 10 years old. I had 3 siblings, lived in Parma, Ohio, another apartment, finally a little 3-bedroom house. And my parents always went by this formula, and maybe you remember it and have talked about it because I came on late to this discussion. But, you had to put 20% down, no matter what the banks were telling you, 20% down, and then a certain fraction of your monthly payment. There was this formula that you followed, and I see you shaking your head, so maybe you know about that. But, we didn't get in trouble.
That's right.
And I know that most people, it takes 2 people to work today and whatnot, but I am amazed to see the very young people with 4,000 and 5,000 square foot homes, and you just wonder, like, I'm an RN now, my husband's a physician, we work really hard, I don't know how they're doing it, but I really think, unfortunately, that a lot of people have been living beyond their means, and I'd like you to comment on that. Maybe you've said something already, but also I read in the Plain Dealer yesterday, in Shaker Heights, a very wealthy community, because in Cleveland, that there is a vacant lot, and which I was surprised to see, but because it is a beautiful community. They're using stimulus money to turn it into an orchard. They're using stimulus money to turn it into an orchard.
To our guest.
So I get your point about what has happened in housing. 1950s, 1960s, 1970s, the median first-time home buyer put down 19% for a down payment and finance the remaining 81% on a 20-year or 30-year fixed mortgage that, quite frankly, became more affordable over time. As you got a little raise, as there was some inflation, you could pay that thing down. Buying a home was not only a responsible thing to do, it actually steadied the family's budget. By the time we hit the 2000s, are you ready for this? 2005, the median first-time home buyer, first time into the market, was putting down 0. Financing was 100%. In fact, they were financing costs So they were actually financing somewhere around 103 to 107% of the actual value of this home. So I want to say this as directly as I can. There was so much irresponsibility out there on all sides. The sides of the financial institutions who said we can make billions off this and who did make billions off it, and the side of the families who said, wowee kazam, you know, I'm going to change from being a guy who is a computer programmer or from being a nurse to being somebody who flips homes. Plenty of irresponsibility to go around.
Takes us back to the financial regulation bill. So we know the House has a product out there that it's approved. We're waiting for the Senate, and there are a lot of issues involved. Here's just one headline today. GOP takes aim at Democratic plans to curb the financial industry. This is the New York Times. So if a bill comes out of the Senate, what should it look like in your view?
You know, if we haven't learned anything else from this crisis, we should have learned that turning loose the Wall Street guys is not only will they engage in crazy behavior, they engage in crazy behavior that risks the rest of us. And sure, there were many private citizens who played right along with them, but the point is these guys led the charge, and we've got to find a way to rein that back in. And it happens in lots of different ways. I'll just give you a couple in this going forward. There's a Consumer Financial Protection Agency, kind of a mouthful, but the bottom line is to say, look, on consumer financial products, credit cards, mortgages, check overdraft, these agreements need to be readable and understandable so people can compare from one to the next to the next. 2-page credit card agreements, 2-page mortgage agreements, 1-page check overdraft agreements. Let's get a little market competition and let people see exactly what they're doing and what the alternatives are.
Some would like you to run that consumer agency. Is that a job you want?
You know, what I want right now is to see an agency happen, and this is really important to me. I don't want to make this about me. I want to make this about a strong structure that works the right way regardless of who's running it.
Have to make this about you one more time. Your name has been thrown out there as a possible nominee for the U.S. Supreme Court. What do you think?
You know, it is such an honor just to have your name mentioned in that kind of company. For anyone who's ever studied law, who's ever cared about it, there is no higher honor than even to have your name mentioned. So I'm very touched.
University of Houston bachelor's, law degree from Rutgers Law, Newark, professor of law at Harvard, expert in commercial law, business-related law. Elizabeth Warren continues to take calls. This one from Boston. John, Democrat. Hi there.
Yeah, hi. Well, I mean, the reality here is that she knows what the real issues are, but she won't pursue them. You can go to my website, miss. It's wheretovote.com, WHERETOVOTE.com. You can write it down, okay? Really write it down, though. Okay, just don't pretend you're going to write it down.
It's there.
And you can actually look at Jack Reed evidence. Jack Reed served as the chairman of the Senate Banking Subcommittee while he took $4 million in campaign contributions from the banks. Then he voted to deregulate those same banks. There needs to be a grand jury investigation against Jack Reed, a senator from Rhode Island, Charles Schumer, and all the other bankers who took, all the other congressmen who took millions of dollars from the banks in campaign contributions, then voted to deregulate those same banks while serving as the chairman of the Senate Banking Subcommittee.
Anything to say there?
You know, I think the whole question about the influence of money in Washington is nowhere more intense than what's happened in financial services. Right now, the financial services industry is spending $1.4 million a day to lobby against regulations. They want to be able to continue to do what they've done in the past, so they get all the profits in the good times and they get taxpayer bailouts in the bad times. And they are willing to spend enormous sums of money. And who's on the other side? It's just all of us taxpayers. And we don't have that kind of lobbying and that kind of campaign contribution capacity.
Robin from Phoenix, independent caller for Elizabeth Warren. Hey there.
Good morning.
Morning.
First of all, I'd like to thank Mrs. Warren for her job, the job she's doing. I'm a little bit nervous, sorry. She does an excellent job. She explains things really, really well. I just want to thank her. And Secondly, I've noticed that the modifications that the banks have been offering, it's all voluntary, and I don't find that they're really wanting to help anybody. And also, would you talk about the new program that Mr. Obama just announced about underwater mortgages? And I sure thank you, and I'll take the answer off the air.
Thanks, Robin.
Robin, I understand. I am very worried about the fact that our approach to mortgage foreclosure modification is to put a little money on the table and say to the banks, please, would you come over and work with these homeowners. The reports we get of, the servicers who lose the papers, who don't know what the programs are, who don't know what the pieces are, they just keep flooding in. Treasury, I do want to say this, they are working harder. They have gotten a little stiffer with the banks. They've gotten much stiffer with the mortgage servicers. They're beginning to collect data. But a year and a half ago, when it was the big banks that were in trouble, boy, we found solutions, and we found them fast. When we're talking about millions of families in trouble, it hasn't worked so well. Last year, Treasury managed to get through 167,000 mortgage modifications. For every one they got through, there were 10 families that ended up foreclosed against, lost their homes. And we're looking at similar numbers again this year.
Tim on the line now from Pottstown, PA, Republican. Good morning to you.
Hi, how you doing?
Fine. Go ahead, Tim.
Okay. Please hold on to hitting that button so soon. I just wanted to make a point about how the biggest problem I see is the complete lack of regard of manufacturing over in China. We seem to be using them as the biggest manufacturer of everything, every consumer product we could possibly need here. And what's happening over there, and I have proof of this, what is happening over there is everything that they make, every prototype that we send over there, okay, they can turn around and make that product and sell it out the back door to anybody all over the world. It's then being sold on eBay. This has killed our retail.
Tim, do you have a question?
Okay? Yes, this has killed our retail. What is going to be done to stop this?
There's the question.
So, Tim, I want to say it this way. I've been studying the economics of the middle class for a whole generation now. And we have hollowed out our middle class. And the way we've hollowed out our middle class is it's been a real 1-2 punch. Flat wages because of the declining job situation here in the country. And that's not a problem just in the crisis. That's not a problem of the last year and a half. That's a problem of the last 30 years. That productivity has continued to go up. Wages have flattened out. A fully employed male today earns about $800 less, adjusted for inflation, than his father was earning back in the 1970s. Women's wages have increased some, but not enough to make up this gap. And on the other side, core expenses, homes, healthcare, transportation have increased, and that has put the middle class in a squeeze. We've stopped saving, and we have turned to credit. But the bottom line means to rebuild a middle class, to make it strong. I'm working on the credit end right now with this Consumer Financial Protection Agency. There are others who are working on health care, trying, I hope, to get costs under control. This whole mortgage thing that's been out of control, we hope in part will help, if we get it back in control, bring down prices in housing. But ultimately, we don't rebuild our middle class if we don't rebuild our job space, if we don't have a strong economic foundation. If we don't make anything here in America, then our future is not as a strong country with a vital middle class.
Of course, as you know, with this consumer agency that might happen, part of the debate is whether this should be a freestanding entity or tucked within the Federal Reserve. Which do you prefer?
Look, I prefer a completely freestanding agency, but this is the part to understand. What really matters is functional independence. If it's freestanding, we know that it's functionally independent. If it's not freestanding, you might be able to make it functionally independent. But here's the bottom line. If it's not going to be functionally independent and able to get the job done, then don't pass it. We don't need one more bureaucracy to sort of muddle around. Remember, we have 7 bureaucracies in Washington right now that have a piece of the consumer financial protection. What this agency is about is a pair of scissors taking those 7 agencies, those 7 bloated bureaucracies, slimming them down into one agency and then holding that agency responsible. If it's not going to be an agency with the teeth to get the job done, then let's not pretend. Let's just leave the bureaucracies where they are.
We go to Raleigh, North Carolina now, where Warren is on the line for Democrats. Hi there.
Hello. Thank you for taking my call.
Sure.
I have a personal question, but maybe some of your viewers will also have this same problem. You mentioned AIG a while ago, and I have a paid-up life insurance policy with them. The cash surrender value is substantially less than the death benefit. I've been leaving it with AIG, but I get a little bit more nervous every time I hear some bad news about them. Would you be so kind as to go out on a limb and suggest what you think the future of AIG might be in the next few years? Thank you.
I understand your concern, and let me say, I can't give you legal advice and I can't give you investment advice, but could I talk generally? That might be helpful. Each of the insurance subsidiaries that issues life insurance in whatever state, I've forgotten, what state does Warren live in? I forgot, I'm sorry, Warren. But in each state, there is an insurance regulator that makes sure that the assets are there to back up the insurance promises, the agreement to pay the life insurance death benefit over time.
I lost it on my screen. It was North Carolina.
North Carolina. North Carolina, that's exactly right. So the North Carolina insurance regulator is the one who's watching out for you now. And I'm going to be blunt. Those guys pretty much got snookered during the last go-around. They're awake now, and they understand. They relied on the rating agencies that were rating all the assets that AIG was holding as AAA, and they thought, oh, well, okay, this stuff's AAA, that looks good. They now know that's not true. AIG's insurance subsidiaries received an infusion of cash. They're now in the business of paying it back. I would say on the insurance front, AIG's looking pretty good. I think they're looking strong. I hope that's the case, and I will tell you this, Warren. I think we're not supposed to talk too much in advance of what we're doing, but the Congressional Oversight Panel is doing work right now on AIG, and we're going to have a report on that pretty soon, and I hope that's valuable to you.
One last call for our guest is from Chapel Hill, Tennessee. It's Colleen on the independent line. Hi, Colleen.
Hi. Thank you for C-SPAN,
Sure.
Ms. Warren. I do appreciate most of your information you put across. This is my question. Okay, first of all, there's 2 books that people need to read. One's called Too Big to Fail. The other's called The Big Short. My interest is in these interest rate swaps that are being used to take down county or state governments, such as in Jefferson County, Alabama, with the sewage system that's going on. That's near Birmingham, in the Birmingham. Is anyone doing anything to kind of pay attention to this? Because this seems to be similar to the CDS that's been going on, you know?
Yes, ma'am, it is. I am very worried about this, and this is what regulatory reform that is pending in Congress right now is about. We have pumped money back into the system, into these investment banks, into these large financial institutions, and basically haven't changed any of the rules. They're still out there engaging in the interest rate swaps and everything else you're talking about. So what Congress is debating right now is how much restriction to put on that, how much to force them to trade on markets where it becomes more visible what's happening, and how it is we try to stop this from happening again, the bankrupting of America's cities, America's counties, and maybe even America's states.
Elizabeth Warren is chair of the Congressional TARP Oversight Panel. We appreciate you coming on and taking viewers' calls this morning.
Thank you so much for having me.
Half hour left in the program. We will turn our attention to efforts to increase what's called government transparency. Our guest will be Rick Blum, who is coordinator of the Sunshine in Government Initiative. Be right back.
Program dealing with small business lending, and in particular with mortgage foreclosures. That part of the program has been much slower to get started, and a problem that still seems to be unfolding. And the reason this is important It's not that the Congressional Oversight Panel is saying, hey, look, we need to save every homeowner, we need to bail everyone out, everybody who ever bought a home needs to stay in that home. Hey, look, that's not the case. Some number of people need to be moved out of those homes. They can't afford them, never will. But for those who could come to the table and make a deal with their lenders, those deals need to get made, and we need to stabilize this market, because until we do, we're going to continue to have trouble in the economy overall. Construction industry is a big part of our economy, and when the housing market is still going down, there's no new construction. Same thing with furniture and home centers. Lots of employment is related to this, and ultimately, no economy recovers when everyone's looking.
We have a chance now to talk with Elizabeth Warren, who is chair of the Congressional TARP Oversight Panel. Your operation has a new report coming out. What did you look at? What does the report say?
Well, this is actually our third report on mortgage foreclosures. You may remember that when Congress passed the original $700 billion bailout, they didn't say, here's $700 billion, go bail out Wall Street banks. They said, here's $700 billion to deal with troubled assets, meaning mortgages that were in trouble. We managed to get the banks back in the black, as we know. They're posting good numbers. But mortgage foreclosures continue to be a very serious problem. So what this report is about is evaluating what Treasury's done and really trying to make sure that the attention stays on that important metric. Congress said, we will measure the success of TARP by its effect on unemployment, its effect on people's savings, and its effect on mortgage foreclosures.
Remind us of what...
Looking out, saying another million foreclosures this year, another million the year after that, approaching a million the year after that. This is a problem we need to get ahead of, we need to get it resolved, and rebuild our economy on strong footing.
Let's get right to our calls. Arlington, Virginia. Patrick, Republican for Elizabeth Warren. Hi there.
Hi, C-SPAN, how are you?
Fine.
Elizabeth, how are you today?
Good.
It's good to hear. I just wanted to make a couple comments and then ask a question here. Relative to TARP, my research has shown that Bank of America, Citi, and all the auto companies have got less money than Fannie and Freddie, Fannie Mae and Freddie Mac. It seems that some people in this country are under the impression that housing is a right, and it's not a right. It's a pursuit of happiness. The subprime issue has not been addressed yet by this Congress, and everyone knows.
TARP is, when and why was it put together? And then tell us how you think it's performing.
Right. You remember the crisis in September and October of 2008. The stock market is dropping. Credit markets are freezing up. There's a real question about the solvency of our largest financial institutions. And then Secretary of the Treasury Henry Paulson turned to Congress and said, I need $700 billion to be able to deal, as he described it then, with these subprime mortgages and other troubled assets that the banks are holding, so that we can get credit flowing again, we can stabilize the banks a little bit, and we can stabilize this growing foreclosure crisis in the country. Now, that was the announcement. Congress passed it, and as part of passing it, put an oversight panel in place, that's us, and told us we have to write reports every single month, and that's what we do. Secretary Paulson then quickly pivoted and said, wait, that's not going to work. So what we're going to do instead is put money directly into the large financial institutions. We did that. They're now making money big time, paying out those big bonuses, but the rest of the economy is still struggling, and foreclosures continue to climb.
So what's next with TARP? We hear about how much money this is going to cost, or maybe not cost at this point. Where are we right now, and where is it headed?
So for the bank bailout part, we're getting a lot of that money back. We have a very large proportion of those dollars back, and we seem to be doing pretty well. There are going to be some that are probably not going to pay. Whether or not the auto companies will be able to pay depends in part on how many people get out there and buy those cars. Do they really have a good product and a good business model? Obviously, we've still got trouble out there with AIG, whether or not we're going to recover all of our money there. There are a few banks that are still in trouble. Most of the big ones are coming back. So that part of the program has pretty much gelled. We see how it works. There are other pieces to the program.